Hi everyone, Megan Marsh here with Select Mortgage in Erie, Pennsylvania. Today the mortgage information that we're going to be talking about is investment properties. I've had a lot of questions lately on how to finance investment properties, how much money you need down, which are all good questions because investment properties have had some of the biggest changes in the last 5 years with all the different things that have been going on in the mortgage industry. 5 years ago, when I purchased my first few investment properties, you could buy a multi-unit, a 2-unit, a 3-unit with 10% down. You can't do that anymore. Any investment property that you're going to buy, which is a property you're purchasing that you're not going to live in, it doesn't matter if you're buying it for a family member to live in, to rent out to college students, to rent out to any individual. If you are not living in the property, it is considered an investment property and you need 20 to 25% down. Single family residences, 20% down. Multi-units, 25% down. So there's three main ways to finance investment properties in general. The first way is you can pay cash for them. If you pay cash, some people like to pay cash and then they like to finance them afterwards so that they can utilize as much money as they can by pulling it out of the property. The second way of financing a property is through personal mortgages. That's through a mortgage broker, through a bank on the personal mortgage end. The benefit of doing a personal mortgage versus a commercial loan is that you can do a 30-year loan, you can do a 20-year loan, or a 15-year loan. These are all fixed rates. That's another benefit. Once we get down to the commercial loans, they're not fixed. So you can do a 30, 20, or a 15. You can do up to 4 units. You can do a single family, 2-unit, 3-unit, 4-unit. The downfall, one of the big changes, is you can only finance 4 properties now. When I started purchasing properties, you could finance 15 properties. And there are some people out there that still have that many on their credit report. They can't refinance any of them personally, though, because you're only allowed to have 4 now. That's a Fannie Mae and Freddie Mac rule. And so they're 30, 20, and 15-year. The rate right now, let's compare a 15-year is about 3.875 on an investment property for a single-family home. Whereas if you go down here to the commercial loans, that's the last way you can finance the commercial loans, the rates are around 6%. So people really would like to do these personal mortgages still as long as they have the right numbers. Commercial loans, 20 to 25% down, it's the same. But most commercial loans, the commercial loans I have, they're 15-year loans, and after 5 years, the bank comes back and they see where the rates are. So the rate changes after 5 years. There's no minimum amount of units, so if you're looking at buying a 5 or 6 unit property, you have to go commercially. There's one option in between a personal loan and a commercial loan, and it's a portfolio loan. It's a personal loan that doesn't go through Fannie Mae or Freddie Mac. And you can still do a 30 or a 20 or a 15-year loan. The rate isn't as good. On a 15-year, it's around 4.875, but it's still a little bit stronger than the commercial loans. So most people, they like to maximize doing the personal mortgages that go on their credit reports first, and then they'll do the commercial loans afterwards. So this is just a start. I hope it helps answer some questions, and if you have any more, you can email me at megan@selectmortgageerie.com. Thanks for listening and have a great day.